Hello everyone and welcome back. My name is Greg Furman, a market analyst here at TraderPlanet.com, and these are the market positions for December the 1st, 2011. Now, another wild day in the markets today with the global central banks intervening to try and preserve their precious equity markets. Somewhat comical, to be perfectly honest, because I really don't think they're being entirely honest with us. There was probably something very serious behind the scenes that caused that move today, and we shouldn't discount a huge sell-off in commodities and equities in the days and weeks ahead. So with that said, we're going to stay away from the S&P 500 trade and some of the commodities because it simply doesn't make sense to go in there and try and trade under these conditions. Because again, this is the rally that we saw in the Dow and the S&P 500, 100% central bank induced. It had nothing to do with anything else but that. So looking forward here, our first trade tonight, we're going to look at the dollar yen currency pair. It had a rather subdued reaction to this news today, and that's what we look for, stable price action. Key levels here, 77.37, 77.51, and 77.64 with a close of 77.59. Things still look okay for dollar yen, certainly better than some of the other pairs. Key level 77.37, and we're going to give that 30 or 40 points considering the market conditions. Now, when we look at the short-term crossover from Vantage Point, that's barely even made across to the downside. Medium and long-term crossover still completely supportive of the move to the upside. Predicted MACD, predicted TSI, also in agreement. Predicted short, medium, and long-term differences, again, sitting at trend-ready levels. We're not ready to abandon this particular trade based on the nonsense that we saw from the Federal Reserve and Mr. Bernanke's friends today, to be perfectly clear. So with that said, we're going to remain with our longs. We're going to go into our daily report from Vantage Point, and we're going to see what we've got. We've got 77.09, 77.86. That's the play for tomorrow. Stops in this particular case should be, in my opinion, respectful opinion, depending on your account size, etc., 75.90 is a reasonable area to stay out of this broker radar. We have non-farm payrolls coming up. We have a lot of things still to come this week. Now, I'm not saying that Mr. Bernanke knows what that payroll number is, but I'm saying that I find it odd that they chose to intervene prior to that payroll number, because we all know if that payroll number comes out weak, the S&P 500 will be at 1080 in a blink of an eye. So we want to keep that in mind. Now, that's our first position for tonight. Now, our second trade for tonight, we are going to revisit the IAU, iShares Comex Gold. I like this better than the GLD, lower management fees, and we can get a pretty decent price on this. Now, we're looking for a very slight pullback. Now, with the foolishness that we've seen today in the markets and the central bank, what they've done here today, gold is still attractive regardless of what happens to equities, in my opinion. I respectfully think that the market will move back into US dollars sooner rather than later, but they will also stay in gold. Gold is doing quite well against the euro. If they're looking at the conversions, etc., I still like this trade, but I'm not prepared to send anybody into the futures markets to do it because it's going to be very, very volatile in there, and the margin requirements are very high. So we move our focus towards the ETF market, specifically the IAU. Key levels here, 1682, 1679, and 1686. Now, what I like about this one also is that we've been moving down on this for probably a couple of weeks now. This trade has been progressing to the downside, and we're just starting to reverse. Predicted MACD, predicted TSI, everything looks good there. Predicted short, medium, and long-term differences also look good. So when we start breaking this down, now first of all, again, the key level, 1682, we want to break this down by the crossover. Short term is up. Our medium-term crossover is just crossing over that trigger, and of course the long term is not completed, so this is a medium-term play. We then go from there into the Vantage Point daily report and try and hone this entry point. We can see we have 16.99, 17.11. I believe it will move more than that tomorrow. But we'll use anywhere between the key level down at that 16.82 and 16.99. Anywhere in that is going to be considered what I would call a buy zone for this particular ETF, and we would target intraday traders, depending whether you're doing puts, calls, or you're buying actual shares in this, or options, etc., then you can 1711, excuse me, is our first target. But medium and longer term traders, again, when we come back and look at this particular ETF, we're buying it at $17 when not too long ago it was sitting at $18.50. So if we can pick up $1, $2 a share on a $17 ETF, that's a pretty nice return on investment. So with that said, these are the market positions for December the 1st, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.